Oh, thank you very much. Thank you. Hey, don't clap yet. You don't know if it's going to be any good. I don't know if it's going to be any good. I got up at 4 o'clock. Now, I understand you've been in the room for a while, and they say that the brain can only absorb what the butt can endure. So I don't know if you need a break or not, but I've been up since 4 a.m. to be here, and I've been sitting in a chair a lot too. I flew in from Joburg, and then we probably spent more time getting from the airport here. I don't know what it is about the traffic. At first, they told me it was all the people coming to this event, but I thought that can't be right. It's busy here. But thank you so much. I've got to say, of all the introductions I've had, that was by far the most recent, so thank you. I've asked to share my views on what's happening in the global real estate phenomenon. And I've been involved in real estate since I was 17, and some of you will be curious as to how long that is. I always looked young for my age, you know. When I tried to date a 17-year-old, she'd think I was 12, and she didn't want to be seen with a 12-year-old looking kid. And then for a while, I still looked so young, I'd speak in front of audiences, and you could tell they were thinking, we paid money to listen to a kid? And then I used to say that I dyed my hair grey to look more distinguished, and that doesn't wash anymore. So I've been in this game for way too long, about 35 years. And in that time, my message has been pretty consistent. And the way I always described it is, you know, and as was referred to, my PhD is in electrical engineering, and you might say, what's that got to do with real estate? Well, nothing. I didn't know what I wanted to study. So off I went to engineering school. And in my first week of university, I looked around at me with the people with the degrees, the professors, the tutors, the lecturers, because I'd been told as a kid, to do well in life, you have to study hard and get a degree. Well, I looked around at the people with degrees, and it appeared to me they didn't seem very wealthy. So I decided to make a study of the rich. I wanted to know, what do the rich have in common? Thinking if I could identify maybe 30 things they did have in common, and if I could emulate them, then I too had a good shot at being rich. Good theory? Of course it is. The challenge was I could hardly find anything that the rich had in common. It wasn't age, it wasn't gender, it wasn't religious belief, it wasn't whether you were born in the country where you were living or not, whether you were the first one or the last one or anywhere in between, and it had nothing to do with education. In fact, I found there's almost a negative correlation between education and wealth. If you're highly educated and you become a tenured professor, yes, you might be on, I don't know, R1 million a year, but you'll never make 100 million. You would know on the 1st of January exactly what your income would have been by the 31st of December. So I could only find two things that the rich had in common. One, I can spend all day talking about it, we won't go into it now, but it's integrity. The rich have this thing that their word is their honor. And that doesn't mean to say that you don't need to have integrity to get rich. People in the mafia are extraordinarily rich. No, true, I'm an observer. But if you live by the sword, you die by the sword, right? So if you use devious mechanisms to get rich, then other people in your clan of friends will use similar methods to take the money from you. So integrity is really important. But the only thing I could find that the rich had in common is that almost without exception, the rich either made their money or held their wealth in real estate. And that's why at the tender age of 17, I decided to buy my property. I kept on buying. I got a bachelor's degree in engineering, and the university came to me and said, Dolf, it's 4 years for an honors bachelor's degree, only 1 more year for a master's. Why don't you do that? And I said, because, and I didn't have a reason. So I did it. And halfway through, they said, wow, you're doing so well. Why don't you switch from doing a master's to a PhD? You save having to write the master's thesis. And I said, because, and I didn't have a reason. So I did that. And the moral of this story is, if you don't know what you're doing and why you're doing it, you end up living other people's lives. So I popped out of the system 8 years later with a piece of paper that said PhD. Many people don't know what it stands for, even those with one. It's a doctor of philosophy. You have to philosophize about some aspect of that science that you're studying that contributes to it. You don't just analyze what others have done. So I got into real estate in this way and ended up sharing what I do. And some of you know I've written, it's an astounding number, I think, 15 books now. And they've been translated into Greek and into Bahasa. Do you know where Bahasa is spoken, by the way? Have you heard of Bahasa? Folks, it is spoken in the most populous nation in the southern hemisphere. It's spoken by the nation with more Muslims than any other country on this planet. It's Indonesia. 220 million people. It's also the language of Malaysia. And we all think in terms of doing business in Australia, but do you know that there are more US dollar millionaires in Indonesia than there are people in Australia? It's food for thought, isn't it? That's why, I find these stats kind of interesting and fascinating. And we've had them translated into Japanese. I learned Japanese as kids. I've got audio courses and books in Japanese, and we've done other languages too, Korean. I also taught other things. Here's one, a book I wrote called Tax-Free Real Estate Investing. And if I may just quote from the foreword or the preface, it says, it's often said that there are only two certainties in life, death and taxes. This book presents no evidence that we can overcome the inevitability of death. However, we present evidence that taxes are not a certainty. That is not a printing error, and this is not an underground book. So I would show... No, and it came out in 2007. No one's challenged us on it. There are ways of investing in real estate without necessarily having to pay tax. In fact, let me put it to you this way. If you have a business, name a business, a flower shop or a meat processing plant or something, you make biltong, and you make 500,000 Rand profit after paying all your cash expenses, do you expect to pay tax on that 500,000? You do, right? Some of you are very reluctant to nod. I understand the feeling, but that's what I love about real estate. Now, if you have a real estate business, you invest in property, you rent it out, and after paying all your cash expenses, your property taxes, your insurance, your maintenance, all that sort of thing, advertising, you end up with 500,000 Rand profit. Do you expect to pay tax on that or not? And those of you who are now nodding enthusiastically, you've forgotten a few things. In many parts of the world, and under certain circumstances here in South Africa too, you can claim what's called depreciation. Depreciation is a phantom deduction. You can make a deduction for depreciation, even though in general real estate goes up in value, not down. The government says it's got a useful life of 28 years, so you can depreciate it at about 2.5 or 2.8% a year. It varies country to country and jurisdiction to jurisdiction. So it is possible that when you take account of depreciation, your income is less than zero, if you have more than 500,000 Rand in depreciation. So the government says, we know you're making $500,000 profit, but for taxation purposes, you're running at a loss, and we'll subsidize your loss by giving you more money. Does that excite you? Because most of you aren't letting your faces. No, I think it's great. So, I would teach these things, and I would highlight it, which is why I explained the engineering thing, that I spent 8 years at university doing a PhD in electrical engineering, and everything I learned has been made redundant by new technology. You think about that. We learned the operating characteristics of valves. People without grey hair don't even know what a valve is. They think it's something you turn to get the water coming out of the tap. But we're talking about valve radio-style valves. And they were replaced by transistors, which were replaced by integrated circuits. And then VLSI, very large-scale integrated circuits. And then ASICs, application-specific integrated. It all changes all the time. But real estate stays the same. I used to write in my books that what you learn today in real estate will be valid in a decade, and what you learned 3 decades ago is still valid today. Equity is still equity, collateral is still collateral. So you might say, well, if it doesn't change, why do you write about it? Well, we could figure out subtle nuances of doing really well. I would conduct surveys and find out that the biggest fear, not just in the real estate world, but in the world, the biggest fear, do you know what the biggest fear is, by the way? That people, is it the fear of some untimely, horrid death? No, do you know? The biggest fear in the world, according to all research that they do, is the fear of public speaking. And I find it bizarre. The second biggest fear is the fear of having to go to a bank to ask for a mortgage. And the most frequent call I get in the bank, I know there are some bankers in the room, and erstwhile bankers, previous bankers, whatever. I don't know if you know how intimidating it would be for a client to come to the bank and ask for a mortgage. And we would get requests all the time. Would you show me how to do it? Would you come with me? Would you bolster my attempt to get some money? And I said, you shouldn't attempt to get money. Most people would go in, cap in hand, and they'd always get down on these and say, please, Mr. Bank Manager, would you condescend the bank and your own personal family to consider me maybe for a loan, even though I'm probably not worthy? I don't know, you've got to say no, thank you very much. I mean, that's the attitude you go in with. And when you think about it, you shouldn't go to the bank to apply for a loan. You're not asking for a loan. We have, in a commercial situation, a lessee and a lessor. You all know that the lessor is the landlord, right, the owner, and the lessee is the tenant. Make sense? There's always someone offering competition. But when it comes to applying for a mortgage, you've got a mortgagee and a mortgagor. Well, we go to the bank to ask for a mortgage, so the bank gives it to us, so the bank must be the mortgagor, and we're the mortgagee because we get the mortgage, right? It's wrong, folks. The bank is the mortgagee. That's why what's called a redemption sale here or a foreclosure sale in America, in many parts of the world, is called a mortgagee sale. The bank, as mortgagee, has repossessed the building to get back the money they lent on it. How does that work? How come they're the mortgagees? Here's how it works. You want to buy the property but don't have the money. And the bank has the money and fortunately doesn't want to buy the property. Why do I say fortunately? Because if they did, they'd buy them all. So you go to the bank and say, Mr. Bank Manager, I want to buy this property. I don't have the money. If you will lend me the money to enable me to buy this property, I will give you a written pledge that I will faithfully pay interest every month and at some prescribed rate or pay back the principal as well. So here's the transaction. The bank gives you the money. You give them a pledge. That pledge is called the mortgage. That's why you are the mortgagor and the bank is the mortgagee. So what's the point of all of this? Instead of going to the bank asking for a mortgage, you've got to shift the mentality of it around a bit. You've got to go to the bank and offer them a mortgage. Mr. Bank Manager, I found this hot property. When you hear about it, you'll probably wish you'd found it before me. But here are the deals on it. The return, it's astounding. It's 16%, and that's before I found a tenant for that vacant spot. I've already got a tenant lined up. Here is the, the LOI, the contract that he's coming up with. So I want to offer you a mortgage on this building. It's a pretty sure bet. And in addition to offering you the mortgage, I want to offer you collateral to secure your investment. In fact, the collateral I'll be offering on this mortgage I'm giving you is the very building that I'll be buying with the money you lend me. Do you see how we've changed from asking for something, please, to offering them something? So anyway, that's what my books would be about. But when people would say, what's new in real estate? I'd say, well, it's not very interesting. I didn't get into real estate because of the high interest factor. I mean interest in an academic sense, not bank interest. To get mental stimulation, you read books and travel the world and do all kinds of things. But that's the beauty of real estate. It gives you more opportunity to do those things than if you have a job in a factory. All right? But you don't do it for mental stimulation, but it's lucrative. So that was my story. Nothing much changes, except for recently. Recently, there's been a massive change. And, I think it's great that you're all here. By the way, I honor the fact that you're here. Thank you for even listening to me. This change is so big, in 10 years' time, we're going to look back and we're going to say, we knew it was coming because we heard about it at the Rhoda conference. By the way, I just want to acknowledge that Alan Rhoda has been involved in this industry for some 30 years now. I'm putting on these conferences for 23, is that right? 23 years. I think that deserves a round of applause. It's great. No, it is. It's great. And more recently, teamed up with Neil. I've been working with Neil for, I think, close to a decade now. Doing all kinds of aspects of real estate here. And Neil, speak up if anything I say is not your perception. It's been the same message all along. The books are essentially the same, but there's been a massive shift. And to explain what that shift is, I want to just use some words to paint a picture. I want to use analogies of something that we've all experienced, or most of us have experienced. I have a daughter, she's 13 now. She grew up with cell phones. In fact, the iPhone came out in 2007 when she was 6, and that's when her awareness of phones started. So she's grown up with smartphones. But most of us I remember a time before there were cell phones. I remember a time when we had pagers. This was a little gadget, a bit fatter than the current phone. And if someone dialed a specific number, it would go beep, 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 beep. Does anyone remember those? We felt so empowered. You could now be driving in your car, minding your own business, listening to music, not having to worry about texting. Well, it's illegal to text and drive, but I've got to respond to this quickly. You can pull off the road and no, I'll do it quickly when I'm driving. Oh, there's a phone call coming. I have to check voicemail. We would be driving and suddenly you go beep, 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 beep. You say, oh, I'm so important. Someone needs me. Well, you didn't have a phone to call them. You'd have to pull off the road somewhere and go to a coin box. In fact, remember coming off a plane? There'd be a row of those pay phones or coin phones, whatever and people would rush up to them, and you'd just miss out. There were 20 of them, and there were 20 people ahead of you. Now you're waiting, I've got to call the office to find out where my first appointment is. It's time, This has changed that all. So cell phones came out. Do you remember the price of them? They were analog phones, the first one. The first brick Motorola one, 3-watt transmitter, heavy as anything. Then Motorola came out with the flip phone. I remember the price, $5,995. And the rate per minute was $1.87, so whatever that is, about 20 Rand or something a minute, incoming or outgoing. Now, I'm an early adopter. I've got a box full of technology that I was an early adopter on and it never took off. But I'm also an early adopter of stuff that did take off. And my theory was, if I can have a mobile phone in my car and respond to ads and get calls from real estate agents and calls from bankers and valuers and appraisers before anyone else because they have to wait till they get back to the office, that might enable me to get one deal done sooner. And if I do even a modest deal, let's not even talk about a multi-million-dollar deal, but a $100,000 deal because I've got this phone, that $100,000 at the rate of $1.87 a minute would pay for all my real estate-related phone calls for the rest of my life. So I got one, and I did the deal. What I didn't realize is that the price of phones and calls would go down. We have 4 main providers in the States. This is not a plug for them. I'm just an observer, and I share what's happening. I'm on T-Mobile. They charge me $40 a month for unlimited calling, unlimited texting, and unlimited internet. And not only that, to capture a bigger share of the market, I can now travel overseas. All my texting overseas is free. So when I'm in South Africa, texting someone in Peru, it's free, incoming or outgoing. It's all included in the $40. I have internet here that's free. My internet on my phone's better than in the hotel I was just at. In fact, I had 3 days there without having internet. I was down. That seems to be a common problem here. If real estate doesn't work, folks, get into the internet game and become a service provider. So this technology has taken off. Everyone's got one now. You know, they've sold 1 billion smartphones in a year. It's astounding. That's enough for 1 in every 7 people. And you might say, so what? Well, then we had phase 2. Bear with me. We're getting to kind of a dramatic point, I believe. Phase 2 was all the apps. Facebook and Twitter and Instagram and all these other things. Now, I'm on Facebook and I maxed out at 5,000 friends, do they call it? But I don't know how to convert it to a whatever page, so I'm sort of stuck there. I'm not into FaceTime in a big way, and I don't really tweet. I like doing real estate deals. But I was behind the ball game there, folks. I'm on Instagram if you want to follow my photos. But these things became social phenomena that everyone's connected. And you'll see it yourselves. You don't have to take my word for it. I went to the airport. There was a family of 3, a mother, a father, and a kid. Were they talking with each other? No. What were they doing? They were all on their smartphones. Whether we like it or not, it's taken over. We're all dependent on them. We all take our smartphones with us. We never leave home without it, right? Do I have a watch? No. Time, it's synchronized with atomic clocks through this thing. Why would I want a watch that I might forget to wind, or needs a battery, or if it's an auto wind, etc.? Time zone changes. I land in a new time zone. This updates it instantly. That's pretty cool, isn't it? So we've got all these apps that are working. But then something else happened. The apps started to be used for things that they weren't intended to be used for. And I'm going to say 2 words, and just think to yourself, what comes to mind when I say this? Arab Spring. The Arab Spring occurred about 3.5 years ago when we had Colonel Gaddafi, who'd been the dictatorial leader of Libya for, 38 years or something. And suddenly there was an uprising. And you know why that was enabled, right? Why was that possible? Because of the apps on these smartphones. If you had to go to a printing press and say there's going to be a meeting in such and such a square on Saturday afternoon at 2 p.m., before those leaflets could be distributed, the perpetrators would have been shot. But with these devices, it was instantaneous. I go to China and they block Facebook and Twitter and Instagram and all that sort of thing there, but everyone's got a way around it. I just use free apps, which are VPNs, and you can circumvent it. So that you can't really block it. Once it's occurred, it's there. So you've got these apps that enable things like the Arab Spring. Tunisia went down because of Facebook, or it was enabled by Facebook. I shouldn't say because. It enabled it in a manner that it wouldn't have happened. Now, it's not been successful everywhere. Syria is still having a lot of challenges, right? But these apps are changing the world. To give you another example, who's heard of Uber? U-B-E-R. Just like 5% of you. Who's used Uber? All right, so it's the same number. Would you ever go back to a conventional cab once you've used it? Let me explain what Uber is. We've all used taxi services for decades, right? There's a special color, they have little lights to say available or not, and you hail one or you call one. When you call them, it's a real pain. Yes, I want a cab, I'm at the hotel, I'm not sure what this hotel is. I'm not. let me ask someone, you have to ask, oh, it's such and such a hotel, okay, how long will it be? We don't know, sir, we'll find out, you know. It's fuzzy logic. With Uber, it's an app. These phones know where you are because they've got a GPS on them. And all the drivers of Uber, their phones know where they are. So when I say I want a cab, it already knows where I am. It's got the pinpoint on it. And it shows me all the Uber cars in the vicinity cruising around. And then when I request one, it assigns a car to me. It says it'll be here in 4 minutes. Here's a photo of your driver, Henry. Here's his license plate of his car. He knows who I am. He is there in 4 minutes. I get inside, he already knows where I'm going. If I've typed it in, I'm going to the airport. Or he takes me there, he offers me water. I've never been offered a drink before by a taxi company. And when I get there, I don't even need to pay him. It's all done through the app. And it's got something which we'll come back to later, and that is social proofing. When I finish that ride with my Uber driver, I can rate him on a scale of 1 to 5. How good was he? And he can rate me. And so the system knows whether the drivers are good or not, or popular, and whether the passengers are scoundrels or not. And I'm telling you, it is so efficient that unless there's no Uber car around, I don't want to use a conventional cab. Now, the status quo, object. So 2 weeks ago, a lot of London cabbies went on strike. You probably read about it. They said, this is not fair. We've been in this business for decades. We've gone through training. We have regulations. And these blasted Uber people can come along and kind of take over and undercut us. And it's not going to work, folks. It's like trying to hang on to old technology. It's saying motor cars shouldn't be allowed to come in because we've been using horses and carts for centuries. So if you're a taxi driver and you don't like it, switch and become an Uber driver. So here's the final step, and then we're there. On technology, we've got websites like Kickstarter. Heard of Kickstarter? Or Indiegogo. If you haven't, this is significant, folks. This is the thing that's changed in real estate that is going to revolutionize it. So if you had a technological invention, a smartphone or something, you wanted to take it to the market, you would have to raise capital. You'd either go to an angel funder or a venture capitalist. And let's say you needed $500,000, say. All right, then they would provide you with that capital if they liked the program. But they would take 80 or 90% of your company, true or not. So now you're kind of working for them, and you get 20%. It could still be a lot if it does well. So Kickstarter started, which is just a website where you put your idea on the website, maybe with a little video of it and a description, and you now invite people to participate. There's no limit as to how much or how little they can participate. It might be $20, it might be $500, $100. And they were finding that not only were these things fully subscribed, they'd be oversubscribed by a factor of 2, a factor of 5, a factor of 40. And the initiator of the idea didn't have to give up 80% of his company or even 50%. Sometimes all the people who put up $100 at a time got was one of the early prototype units, or the right to choose their color when they were eventually made. So you raise the same $500,000, but you still own it. These are so successful. There are countless technological ideas that have been put on the market this way. Indiegogo is another one. Well, governments around the world have seen this, and they're starting to realize that this is the way of the future. And the way that we've funded real estate in the past has either been an individual buys it, or you form a syndicate, or you have some kind of a public entity. A common one would be a REIT, a real estate investment trust. But there were very strict constraints as to how you could do that. The SEC, whatever it's called in the local countries in Australia, it's the Australian Securities and Investment Commission. Usually it's the Securities Exchange Commission. They have strict rules. In most countries, it's somewhere around a limit of 25 investors without them being accredited. And if you have to be accredited, then you need net worth of $1 million and income of $200,000. If you're a couple, it's $2 million and $150,000, whatever the numbers are. They vary all the time. But it was tough to do it. So governments around the world, it wasn't even the United States that initiated it. It's got 4 or 5 in the ranking of coming out with new rules for allowing multiple people to put money in. In America, it came under the Jobs Act. It's a misnomer because it's nothing to do with jobs or employment. It was an acronym. I don't even know what it means. It doesn't matter. It came out last year. This is all very recent. They're evolving it now. Crowdfunding is an emerging industry. For the first time in history, you can crowdfund real estate. Why is that significant for you? Because if you wanted to be involved in a property, in the past, you might need R500,000 to be able to get a stake in a small commercial building or a large home or a small apartment complex. And now you've got the option of being an investor. If you've got that same, what did I say? I don't even know, $50,000, say, you can put $1,000 into each of 50 buildings if you want. Right? It's just changed. So all of a sudden, it's freed up the market to more people. And as Scott's going to explain, Scott's going to go into a lot more detail as to how we at Wealth Migrate operate this thing. But the proportion of people who have access to real estate has traditionally been very small because the barrier to entry has been quite high. You either need a relatively large amount of money, or you need credit worthiness so that you can go to the bank and offer them a mortgage and offer them collateral and offer them all kinds of things so that they'll eventually condescend to giving you the money, right? Does this make sense? Yep. Okay, so it's a phenomenal change. And I always say there are three kinds of people. There are those who make things happen, there are those who watch things happen, and then there are those who wonder what happened. And you have an opportunity, and again, I want to give you full credence for being here, and that you get to hear things at the forefront, emerging technologies, some that will fizz and some that will take off. It is my personal belief, based on my 35 years of having experience with this, I haven't really gone into what my experience is other than I've written a few of these books, but I was involved with the Rich Dad organization for 5 years. I wrote the book on real estate in the Rich Dad's Advisor series. I've been on the faculty of Trump University for 5 years. I teach wealth creation at Tony Robbins' Wealth Mastery events. I've been a professor of real estate, not engineering, at UNT. So I've had a bit of experience of these things. I've taught in 26 countries. This is the new wave. This is the first time that we've got a phase shift of the way property will be perceived. And it's going to open it up for all of you, because now you've got the opportunity from your chair where you're sitting here in Cape Town or in regions to invest anywhere in the world. And it's happening. The world is getting more global as we speak. You know, my parents went from Holland to Indonesia in 1950. And they got on a boat and got to Indonesia, and about 2 months later, they got a letter from Holland to say that my dad's dad, my grandfather, had passed away 2 weeks after the boat left. But there were no telephones or anything to communicate that. The world has sped up. We're becoming smaller and smaller. We're becoming more global. But I think it's fair to say that for most of you, to invest overseas, and I'm not saying you should or shouldn't, but I know there are some compelling reasons why many of you want to consider doing that, hedge your bets against a possibly falling rand and all kinds of other phenomena going on. To invest overseas was quite a tricky proposition, true or not. If you just gave your money to someone whom you hoped would look after your interests, there were a lot of tears at the end of that. So, right? So the alternative was that you had to get on a plane and go there yourselves. Then you're still faced with which one do you choose? Do you believe this story or that story? Because they seldom have a consistent theme. So now you're looking at where you invest and how you do it. There are a lot of factors. With crowdfunding, it's suddenly going to change. You can go onto a portal or even onto your smartphone, and just like you can push a button to order your taxi and you can see what's happening in other parts of the world and revolutions going on and whatnot, you can look at real estate available at that time. So Wealth Migrate is at the forefront of this. And one of the great things, I think, is it's largely coming out of South Africa, which I think is great. There is more innovation in some of the non-prime countries than there is in the prime countries, right? We just don't get as much advertising about it, so you all know about that. The second thing is the experience that the team at Wealth Migrate has is so broad. We've got collectively 227 years experience in real estate, and we're already based in all these different countries. Not only based in them, but we've operated on 5 continents. So in one hit, you're going to get a very broad spectrum of opportunities where you might want to invest. Or if you're a developer, you can put your development on the site. That's the other thing. It's a two-way street. And you think about that. America, I love America. I live there by choice. I have a New Zealand passport by birth, whereas Dutch law says anyone born out of a Dutch marriage is Dutch no matter where they're born, so I qualify for that. So I can live anywhere in the EU, I can live anywhere in Australia and New Zealand, and I'm a permanent resident of the States. So I've got a lot of choices, and I choose to live there. But there are some aspects of America which just astound me. And just to give you a little example, and I just check what the how we're doing for time here. There are about 300 million people in the States. The last Super Bowl in February, it's a big sporting event. It took me years to figure out which sport. The last Super Bowl was watched by 114 million people. That's a lot of people watching it. Right? That's more than 1 in 3. And here's the interesting thing. None of those people watching had a vested interest in the outcome. It was pure hedonism. They were just curious to see who would win and what would it be a fun game. All right, now compare that to the number of Americans who export. There are about 100 million companies. Fewer than 1% export. And of that 1 million that does export, 80% export only to Canada or Mexico, which is not even overseas. In fact, most Americans think Hawaii is overseas. So only 200,000 companies export, and those companies that do export, they benefit the country for everyone, because every dollar that's sold overseas raises the value of the local currency and boosts our reserves, right? Or diminishes the fall off in our reserves. Only 17% of Americans have a passport. Can you imagine it? Fewer than 5% leave the country in any one year. So they're very insular. They don't really know what's going on. And I would hazard a guess that here in South Africa, it's 95% of a passport, right? Certainly, I imagine those of you in the room here, you've all been overseas. I come across Americans all the time. Not only have they never been anywhere, why would I go? We've got it all here. And you know what I tell them? You're absolutely right. What do you say? Yeah. But they're going to be in for a rude awakening, because we talked about hedonism before. I think there is a possibility, a finite possibility, based on some of the wording that Clem Sunter uses, and you've no doubt read it in Scott's book. I think there's a finite possibility that America is going to follow the Roman Empire. Do you know why the Roman Empire went down? It wasn't because they weren't wealthy or didn't command a big empire. They lived their life based purely on hedonism. In America, often the biggest decision you have to make on a Saturday morning is which mall you're going to go to get new whatever it is you want. All right, we've become a consumption society rather than what can we create. So I find this is a phenomenally interesting thing. It's those countries that are on that emerging trend that are in a position to be global in their outlook. You all have a great incentive to be global. But I know from the stats that those South Africans who've invested overseas, something like 80% of them have lost money. And now we've got crowdfunding, where those who are specialists at certain things, at finding properties, at evaluating them, at repackaging them, because just to give you an example, one of the things, too, that I love about real estate is when we hear people talk about stats, and stats are very good. I use them all the time, but we've got to remember that statistics are just a group of numbers looking for an argument. And statistics give an average. There's a lot of rivalry between New Zealand and Australia. And Australians always complained that so many Kiwis were emigrating to Australia and going on the dole. And we agreed. We, in fact, claim, and it's true, that Sydney is New Zealand's third largest city, meaning there are more... It's true. There are more Kiwis in Sydney than in our third largest city. But even though they complained about that, we countered that by saying that we increased the intelligence in Australia, because every time a Kiwi emigrated to Australia, the average IQ of both countries went up. Now, I just want to acknowledge you. I say that here, you all understand it. I say that in Australia, and they all look at me, and I say, well, you're kind of proving the point, aren't you? So it's all fun and friendly rivalry. But averages are just that. You have an average, look, another way I put it is, in Australia, half the populations are below average intelligence. It's true, folks. Whereas in New Zealand, half the populations of above average intelligence. And that's how you get an average. So statistics are all about averages. What's been the average rate of growth and interest rates, and average this and average that. And I've built my career on beating the average. I don't want to know about an average. I can beat it. And, we have this friendly rivalry between stock marketeers and real estate investors. And I just want to have a disclaimer here. George Soros, well, he's more currencies, but Warren Buffett, he's in stocks, essentially, right? He's made more money in a day than I will probably make in 3 lifetimes, all right? So I just want to acknowledge that. I'm not saying my formula works for everyone. But here's what I will say. When I try and beat the average in the stock market, I can't think of any theory that has stood the test of time. And when I challenge my stock marketeers and my aficionados of the stock and say, well, what should I do? What theory could I have to beat the average? They can't really explain it. Now, there are lots of mutual fund managers out there, and they all try and beat the average, and guess what? Half of them do, and the other half don't. All right, I've not seen a single book on how to beat the average in the stock market that has stood the test of time. But I've got 18 ways of beating the average in real estate. I could charge you $10,000. Who would pay $10,000 to find out how to beat the average in real estate consistently? Any economy, any country, ever. Quite a few of you. So I'd be a fool to tell you now, free of charge, right? Let me give you a few hints as to how you do it. One of them is to choose the right geography. Because in the United States, for instance, the average capital growth rate for the last 30 years or so has been 9.7% per annum. But that's the average. All right. Do you think there might be some areas that grow at below the average rate, like Pittsburgh, where there are lots of steel mines and they've all been shut down and unemployment is through the roof? Yes, it's going to be way below average. And similarly, there are cities that are way above average. Las Vegas and Phoenix come to mind. Phoenix consistently has been above average. In fact, Las Vegas and Phoenix have been more than 50% above the third fastest growing city. Not for a 5-week period or 7 weeks, for 50 years. Right? So it's very slow to change. So if you invested in Las Vegas or Phoenix, do you think there's a good chance that you might just beat the national average? Not altogether, because your enthusiasm will blow me away. And yes, of course. Now, let's go beyond that. You're in a city like Phoenix. Do you think there are suburbs in Phoenix that grow at faster than the city average than others? Of course, Paradise Valley is one. It's a beautiful suburb. They have no power poles there or cell phone towers. I mean, cell phone reception is bad, but everything's underground. It's beautiful. So yes, that grows faster than other suburbs. Do you think within suburbs there are clusters of streets that might have a better view or a view of the ocean or something? Not in Phoenix. And they sell at higher prices than other clusters of streets for that suburb? Yes. So if you buy the right house and the right cluster of streets in the right suburb in the right city, you're almost guaranteed to beat the average. That's one of them. Do you want to know another one? I'm not teaching you, because when I say it, well, that's pretty obvious. But how many of you have been applying this in your personal investing? If you buy a property by a body of water, be it a lake or the ocean or a river, history shows that they go up in value more consistently and faster than similar houses not by such a body, right? Especially if it's the right body of water. So La Jolla, a suburb in San Diego, it's one of the top 12 suburbs in the country. Everyone wants to be there. Here's another one. Is the average age of first world countries going up or down? Up. The proportion of elderly folks is increasing. We're having to support more retired folks with fewer young workers than ever before. So do you think the demand for rest homes and assisted living facilities and aged people facilities is going to go up or down? Up. So if you invest in anything related to that, you're going to beat the average of housing or real estate for the country. And that's any one of these individually. And I've got 15 more, but I don't have time to do them. But what if we were to combine some of these? Is that a possibility? So there is a rest home in La Jolla that overlooks the seal colony on the ocean. And I just want to put a hypothetical question to you. Do you think the value of that rest home in one of the top 12 suburbs in the States, La Jolla, on the ocean, catering to elderly people, is that going to rise in value faster or slower than the national average? Who cares about averages, folks, when you can beat the average so easily? And the great thing about crowdfunding is you don't have to do it all yourself now. You used to, because you couldn't know whether you could trust one of your financial advisors or not in another country, right? But now we've got social proofing. And as Scott will explain so eloquently, he's got a slide on it. When you buy something on eBay, the first thing you look at is see what the rating is of the seller. True or not? Has anyone done that? You want to, do they deliver? And they can check whether you're any good. Often you'll see, and we don't sell to first-time buyers. They want you to have a track record. Well, how are you going to get a track record? Everyone's like that. But you buy things for $1 at a time or something. But it's social proofing. So when you've got a lot of companies putting their available properties on social networks, on crowd-sourced real estate sites, you can see the feedback from like TripAdvisor and all those other things, whether it's any good. Does this excite you? Yes. All right, it does. Whether it does or not, though, it's the wave of the future. This is what's going to happen, and that's why I'm so excited by it. I'm happy to do a phase shift myself from just finding another one where I can beat the average, it's cranking a handle after a while, to saying, hey, this is a phenomenon that's going to take over in the world. So, you know, Scott, you're coming on next, is that right? I haven't seen the schedule yet, because I think, you know, I just arrived. After tea, all right. So who's ready for a break? Oh, yeah, okay, so we all are. So I just want to thank you all for being here, and I know I've spoken with a lot of words. I haven't even set up my computer to show you slides. I can show you lots of slides to give you analogies. I can give you one simple concept, which is what I was going to do this morning. By the way, you'll notice I never have a script, because if you have a script, firstly, if your plane loses your bag and you don't have your script, what on earth are you going to talk about, right? So I never have that problem. And secondly, have you ever been to an event where they say, well, welcome, ladies and gentlemen, it's such an honor to be here in Durban. Oops, excuse me. I mean Cape Town, sorry. I mean, I get turned off by that from day one, you know. Don't read the script, speak from your heart. So I'm telling you, this is the way of the future. I wasn't sharing this message a year ago because it's just happening now. And you can be at the front end or you can be at the tail end, right? You can be one of the ones who makes things happen, or you can say either what happened, or more likely, I knew it was going to happen, but I never took action. So I'm not saying do it today, but find out what it is. Find out what the competition is, but also go to wealthmigrate.com and check it out. See what's on there, right? And you'll get websites of that. You'll see what it's all about. This is a phenomenon that's going to go around the world. So thank you for your time. I'm here all day. If you have questions or whatever, I'm happy to interact with that. I just want to thank you again, Al and Neil, for putting this event on. Thank you all for listening. Appreciate your time. Thank you so much. Thank you.